Hey, welcome back. Nokia has recently released its Q1 report and I want to share a few highlights and thoughts with you. We see a better operating margin, but a significant decrease in sales, which has continued from the second half of last year. Q2 is very likely to come with a decrease as well, by the way. It's nothing special, just the operations normalizing. What's very impressive is that thanks to a catch-up in sales and a significant increase in working capital, the free cash flow was almost 1 billion euros. Based on the outlook, they should end the year with about 1.3–1.4 billion. So currently that's a price to free cash flow ratio of around 13, which is not bad for a pretty bad year. We can see a significant decrease in the Americas and India following a very good year before. There is also a very nice increase in Europe thanks to the timing of some contract renewals from Nokia Technologies, but without it, Europe is also negative. Just to point out, they have 17.8 billion in current assets, which is very close to covering all the liabilities. For a market cap of roughly 17.5 billion, they are traded below the equity, which is very attractive for a profitable business with so much potential to grow. So even in the extended industry, they have probably the best financials in the market. They see the market remaining somewhat weak but recovering in the second half of the year. That being said, this year's outlook remains the same. They remain confident in the previously announced long-term targets, which for me have always been kind of a medium-term milestone. I think then Nokia in the industry would get in a more mature state, at least in the US and Europe. This was delayed by higher interest rates, which basically pushed the investments 2–3 years into the future. So even if Nokia itself won't benefit too much from a rate cut because they typically don't have a lot of debt, their clients will. Not to mention that being a dividend stock, the market should give it a bit more attention when treasuries pay you 1–2% again. About a year ago, they reduced the net cash target to focus on research and development and other growth initiatives. Well, now they showed some recent deals from Nokia Technologies to highlight a part of what they are focusing on. They also highlighted the partnerships with Nvidia and Dell, so if anything, maybe the market pays more attention to Nokia this way. Remember what happened to Dell recently when they talked about AI and partnering with Nvidia. The way I see Nokia Technologies is basically a safety net that's providing a somewhat stable cash flow to fuel the growth and investments in R&D and the other areas. We can see that out of the 4 pillars of the business, this is the only one where they provide a profit target instead of the margin. The dividend and buybacks remain the same, so a dividend of about 4% and about 1.7% in buybacks, which if I remember correctly is pretty much double what it was a year ago. So definitely not bad while I wait for the market to normalize. If they reach the target in a couple of years, this can be much more attractive. I looked into Ericsson multiple times and there are just too many red flags, plus Nokia has better financials. So between the two and even the extended industry, Nokia might be the best option. So overall nothing unexpected other than the very nice cash flow. I don't see a recovery happening until the Fed cuts the rates, which would allow their clients to focus on investing in 5G. I think this would be the #1 catalyst and it would probably help Nokia reach the 2026 target. For me, Nokia remains a very good investment. They have some of the best financials in the industry, lots of potential to grow, great management and a nice and potentially even better dividend and buyback policy. It remains a key position in my portfolio and once again I'm recording this before I see the report, a quarter won't change anything for me. I think that the next 2–3 years will be very important for Nokia and I see that as a medium-term milestone and I think that we always have to look at the bigger picture rather than just a few months. I think they are better than Ericsson from almost any point of view, meaning that they are basically the best option in the industry, even though Ericsson is relatively cheaper. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out and make sure to subscribe. Thank you for watching and I'll see you next time.